Welcome back to a brand new YouTube video. In today's video, I'm going to be going over how I personally master daily bias and how you can do it for yourself as well. Because I know a lot of people struggle with daily bias and determining where price is actually going to go for their session. This is a very simple way, and I use it every single day to determine my bias. So without further ado, let's get straight on with this video. If you could just do me one quick favor, please like this video right now before I get started. Subscribe to my channel as well. I do post a lot of educational content. So if you do enjoy this video, you're definitely going to enjoy all of my other uploads. Now, the first thing I want to point out when determining your daily bias is one of the most common misconceptions, and that is that you need to use the daily time frame. And that is simply not true, okay? The daily time frame is a very high time frame, okay? And that goes without saying, you know, it's pretty obvious. It's not like I've just dropped some unbelievable gem. Of course, the daily time frame is a high time frame. And the reason I say that is because a lot of people do not trade on the higher time frame, okay? Mainly swing traders are going to be using the 4 hour and the daily, but the majority of day traders were going to be using maybe the 1 to 15 min. So the daily candle doesn't really affect us, okay? If the daily candle is bullish, that does not mean that the entire day went up in a straight line. In that daily candle, there is going to be short positions that I probably might take. And that is what a lot of people get wrong. They just see where price is going on the daily time frame, so they'll look here, okay, price is going up. But they don't realise that inside every single one of these bullish candles, there is bearish moves, okay? Just because the candle's bullish does not mean it just keeps going up all day. So I personally trade on the 1 to 5 minute time frame, which is an extremely low time frame. So I only use the 15 minutes and the hourly to actually determine my bias. I don't go any higher than the hourly because the 4 hour doesn't really have an effect on me either. Okay, I'm trading the 1 minute time frame. So the 4 hour candle isn't really relevant to my strategy. The way I do that is, firstly, I will jump onto the hourly time frame and I will see how price is reacting to fair value gaps. Okay, the main concept we're going to be using is simply just fair value gaps. Now, if you've seen any more of my videos or watched me before, you'll know that the strategy that I actually trade and teach is the inversion fair value gap model. So I simply use my strategy on the higher time frame, and that is how I get my bias. Okay, so I'm essentially just looking for a higher time frame trade, but not actually executing it. I'm just using it for my bias. All I want to see is essentially a sweep of liquidity, okay, and a clear and obvious gap, which you can see we've got here. Okay, we've perfectly swept this swing low to the left with this hourly candle, okay, and we've left behind a clear and obvious bearish gap. Now, what a lot of people do is they see a higher time frame gap and they immediately just think, right, okay, once we tap into that, I'm looking for shorts, with no kind of confirmation and no real analysis behind it. They just see a higher time frame gap and think, okay, if we pull back into that, I'm going to get in. And that's where a lot of people go wrong. There's no real analysis, there's no actual thought process behind it. It's just, okay, fair value gap, let's get in. Like, you've got to be more thorough. So once I've identified a liquidity sweep on the hourly time frame and a clear and obvious gap, all I will simply do until this gets inversed is wait. Literally just wait. Now, whether that means I have to wait for, 8, 12 hours, I just simply won't trade until I see how price reacts to that gap. And you'll see here that we have actually started by rejecting from this fair value gap. So in this scenario, once I see this bullish candle wick in and reject, okay, and then we get the hourly bearish candle straight after, for that next session, okay, so this 3 p.m. candle, I would be bearish because price action has clearly come in and rejected. So I am expecting at least a little bit of a retrace because we have clearly respected this bearish fair value gap. Now, if I was trading during this, I would be looking for shorts, but I would much prefer to just be patient and wait to see if we do actually inverse it. And that is what we're going to be doing and what I'm going to be teaching you now. And that is how I find my daily bias. So I will simply just wait for price to react to these gaps, okay? Do we get an inversion fair value gap? And as you can see now, price has actually come back and filled the entire bearish fair value gap, okay? And we still not inversed it. So what we have got now is a clear bearish bias, and we've actually left behind a bullish fair value gap, okay? Now this is where the inversion fair value gap comes into play. So we are clearly respecting an hourly bearish gap, okay? And we have left behind a bullish fair value gap. So we have swept liquidity, which is the first thing I said, like down here, we've swept liquidity. We have tapped into a bearish fair value gap and we have rejected. Not only have we rejected, but we have inversed a bullish gap. So from this point now, this is now where I would be bearish, okay? And the reason for that is because we are respecting a higher time frame fair value gap and we are inversing the opposing fair value gaps. If that makes sense, it should make sense because it's extremely simple. Okay, we are simply just delivering out of a fair value gap and inversing another one. And if you see this, this signature in price, then your daily bias is very, very simple. It's just bearish, okay? And you will target the next swing low, which is going to be this low here, okay? So in this scenario right now, the second I see this hourly candle close below this bullish gap, I immediately know that I'm bearish, okay? So hopefully you understand that. So simply we inverse this bullish gap, I will now be bearish. So for this entire time now, until price action hits this next level, I will be bearish, whether it takes 1 day, 2 days, 3 days, and that is genuinely all I do. I just look at the higher time frame. Are we respecting a fair value gap and also inversing the opposing side? There's another example here. So if I pull price back to this point, we have got a clear and obvious bearish fair value gap. Okay, let me get rid of these two before it gets confusing and messy. So here we've got a bearish fair value gap, and we are actually delivering from a 4-hour bullish fair value gap. Okay, so that is clearly bullish. Look at the wick, look at the rejection. So that looks pretty bullish, okay? Surely you agree. Now that doesn't mean that immediately I'm bullish. Just because we've tapped into this 4-hour doesn't mean, okay, I'm looking for long straight away. I need to see confirmation. So I need to see a bearish gap be inversed. Once a bearish gap gets inversed, then I will go with that daily bias. So you can see we've got this bearish gap. If this now gets inversed, I will be bullish. And you can see, there we go. So we did inverse it. So from now, I would be bullish and price should not return to this level without going higher. You'll see this one continues going higher and we just keep pumping. And here is one more example. So here we have got a bullish fair value gap. Now, again, most people are going to see this bullish fair value gap, automatically place limit orders and look for longs. That's not correct. You need to see confirmation. So I want to see how price reacts to this gap. Do we reject or do we inverse? And in this example, we inverse it again. So simply, your daily bias is going to be bearish for that session or that day to the next low. Okay, we always target the next low on the higher time frame. And you can see we come down and we target these lows. Now if this is still not making sense to you, then this hopefully will. You can see here, okay, that we perfectly swept this high to the left, okay? Clearly with these wicks. We haven't closed above, so this is not a break of structure. We've simply just swept the liquidity because we haven't closed above, and then we've started retracing back down. Now, in this scenario, like I've just said multiple times, a lot of people are going to be looking at this bullish gap and entering long positions from it. I do not want to do that because I do not know if we're going to respect it or inverse it. So I just simply be patient and wait to see what price does. And you'll see again, price comes down and we displace through it. So now I would be bearish and price should not come back above this inversion fair value gap. And we should always target the next low. Okay, from this point, the next low is going to be there. Okay, that's the next swing low in the market from this point. And you can see price never actually comes up back above there, and it does take out the next swing low. Back test this after this video, you will see how effective this is. It's extremely simple. Like, you're probably expecting some kind of crazy strategy when you click on the video. It really isn't that. It's so simple. It's just using a higher time frame inversion. That is all you need to do. Genuinely try this out and you will see results. So yeah, that is literally how I found my daily bias. It cannot be any easier than that, and it's probably one of the simplest strategies out there to determine your daily bias. It works almost every single time. There is example after example after example that I could show you of this working. So go and back test this strategy. Let me know how you did in the comments. But that's going to be it for today's video. Thank you very much for watching once again. Please do not forget to like the video, subscribe to my channel, and also join the free Discord, which is in the description below. I'll see you on the next video.